Hello traders, Gary Wagner here. Just about 1 o'clock in Honolulu, 6 o'clock in New York. It is Monday, December 14th, 2020, and this is the daily report for gold and silver. A stalemate continues as to whether or not the government will pass a fiscal stimulus bill before the end of the year. In conjunction, there is optimism about the vaccine rollout that just began today. We'll cover that in our opening letter. We'll talk about different support and resistance levels to look for in both gold and silver. But first, to the price board. A combination of factors took both gold and silver, as well as palladium and platinum, to lower pricing today. Gold is currently fixed at $1,831.70, down $11.90, and this, of course, is referring to February 2021 futures. Spot gold also sustained a drawdown. It's currently fixed at $18.28 and change, down about $10 on the day. When we look at silver, although gold declined by about 6.5%, silver is down about 0.5%, a total of 11. We'll round it up to 12 cents and is currently fixed at $23.97.5. And we actually had the dollar weakness today kind of helping gold out. The dollar was down about 0.3% at 90.65. Let's take a look at our current technical studies. Traders, although dollar weakness was able to curtail the drop today in gold spot as well as gold futures, its selling pressure dominated market sentiment. We're looking at a daily candlestick chart. This represents February futures. It's a continuous contract. And in terms of our resistance level, we do have some real resistance at the 50-day moving average, which is currently at 1877.20. But what is really troublesome right now is that we had a major level that was the 38.2 Fibonacci retracement, which the market broke through on Wednesday of last week. That's this large candle. But if you look at where the market opened today, that's what is so troublesome, because it opened right at what was formerly a support level, as you can see here and here, is now a strong resistance level. The next level that gold could find support at or could break through, which is what it looks like to me, is the 200-day moving average. If you recall, recently, and this came in at the end of November and the beginning of December, we had a very, very strong sell-off that only lasted about 3 days. The market broke through the 200. It opened and closed below the 200, and then on the third day we had that pattern called an engulfing bullish pattern. That's this large green candle that began the short-lived rally in which the market was able to trade up to but not through the 50-day moving average, and that's why we're labeling that as a level of resistance. And then below it, of course, is 1846. Currently, as I said, we have gold trading at $1,830 an ounce. Therefore, my recommendation is that I do believe we will see bearish momentum continue. And what we want to see is, if we continue to see selling pressure, will that selling pressure be strong enough to take gold once again through the 200-day moving average? If it does, then we would look at 1771 is the next potential level in which we could find support. All in all, the key is whether or not gold trades lower and once again breaks through the current minor support level at the 200-day moving average. If it does, as I said, we'll look for the market to go to about 1770, but I remain a neutral to bearish stance on gold currently. We have no active trades, and I will remain sidelined. And traders, as far as silver goes, we're looking at a daily chart. This represents the March futures contract on the COMEX exchange. We can see that it has been absolutely range bound for the last couple of months, at least since the end of November, with the top or the resistance area coming in at approximately 26, support coming in at 23. But what we do see is that over this last week, it has broken through the 50-day moving average and continues to open and trade below it. And that, to me, puts a bearish spin on silver, although I believe it has been more resilient than gold. Nonetheless, we are sidelined on silver also with no active trades. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.